Good evening, ladies and gentlemen. It is truly a pleasure and an honor to be hosting you tonight. I see there's some brothers and sisters from Swaziland. Great to have you, great to have you, great to have you, great to have you. Do me a favor, just comment with the country and the city that you're connecting from. I see Michael, I see Lewis, I see Samuel watching all the way from Nigeria. Uh, Great to have you guys. Just please comment with the country that you are connecting or watching from. I'm a big fan of Sandile from Nigeria. Would love to work with you. Now's the time. This is the moment we've been all waiting for. We're about to get started. I see there's quite a number of my brothers and sisters from Nigeria. Truly, truly exciting times. We're going to be having a very, very powerful, a very, very empowering webinar. I'm going to try and keep it as short as possible. But what's important is I want to give you information. I want to give you, sufficient information and knowledge to get you to a comfortable position in terms of trading. I'm Sandile Shezi, by the way. I'm a currency trader. I've been trading since 2009, and I want to share so many exciting things with you. I see Ghana is in the house, Nigeria is in the house, Swaziland is in the house. Thank you so much. Thank you so much. I know we all connecting in different time zone. I believe, Ghana and Nigeria, it's a completely different time to Asia and South Africa. It's actually 6:30 in SA, and obviously it should be 6:30 as well in Swaziland. But those of us who are in Ghana and Nigeria, it's a little bit different. Thank you once again for joining us. Let's get started. So I want to start off tonight by just defining what we are here to talk about. So as I said, I'm a currency trader, trade Forex for a living. It's something I love. It's something I'm passionate about. It's something that I'm known for, right? And I've decided to just dedicate a little bit of my time to share information, share knowledge with you. Now, I know very well some of us might be traders. Some of us might have never traded. Some of us might be a little bit skeptical when it comes to trading. So I want to address, a lot of these unanswered questions or concerns that you might have. And if you are a trader, I want to give you those final missing pieces of the puzzle so that you're able to obviously become a successful and consistent trader. So what is this Forex thing? Let's start off there. What is Forex? What is Forex? How does it work? So let's start by defining it. I hope you've got a pen and paper. I believe in writing down notes. Don't type it, write it down. Don't type it, write it down. I always, as much as we've got iPads and all these smart devices, write it down. If you write it down, chances are you will not forget. So Forex is basically a decentralized market. That's how I personally define it. It's a decentralized market where we get to buy and sell different currencies. It's a marketplace where buyers and sellers get to meet. In South Africa, we've got the rand. There are pounds in America. Not in America, in the UK, there are dollars. In the US, there's emalangeni in Swaziland. Nigerian nairas in Nigeria, there are pulas in Botswana. So there's different currencies all over the world. There are shillings, there are Swiss francs, Japanese yens. There's currencies I've never even heard about, right? And all of these currencies, when you compare them, they're not the same in terms of value. Some currencies are worth more, some currencies are worth less. And even the value of each of these currencies, if you're comparing them, it's constantly fluctuating. Now, what causes the prices to fluctuate is the transactions that are taking place in the market. Now, remember, people trade currencies for different reasons. Some people have to trade currencies because they are traveling. The last time I traveled to Tanzania, I had to sell my rands and get shillings. When I traveled to Swaziland, I had to sell my rands and get Imalange. And the same applied when I went to Ghana. I visited Accra last year. So whenever people travel internationally, you've got to sell your own currency and buy that foreign currency of whatever country it is that you are going for. So that's one of the reasons why people trade. Number two, Whenever there's import and export, whenever there's import or export, whether you're importing or exporting goods, minerals, commodities, sometimes you have to trade currencies, right? In other words, for countries to be able to do business with each other, there needs to be forex, right? Because different countries use different currencies. Now, you and I, we're not trying to import or export anything. We're not trying to travel around the world. What we want to do is monitor these global currencies. That's what we do for a living. That's what I've been doing. That is what has afforded me to live my dreams and not just dream about these things. Live. I've honestly been blessed to achieve 90% of the things that I've wanted to achieve in this lifetime in a very short space of time, right? It is simply monitoring these global currencies and being in a position where I'm knowledgeable of when I should be buying and when I should be selling. That is what is key, right? So what we want to do is, and I'd like you to write this down. We don't just want to buy when a currency is low. We want to buy when a currency is low at a point where it's going to start appreciating. That's where we want to buy. Because the mistake a lot of traders make is they say, let's buy low. The question is, where is low? Because you might think this is low. After you buy, the price goes even lower, right? You might think that is high, and after you sell it, the price goes even higher. So when it comes to buying low, you want to buy low at a point where the market is about to turn and start appreciating. So in other words, we want to buy low, but at a turning point. You want to buy low at a turning point. That is very important. And you obviously want to sell high at a turning point as well. So you want to buy low at a turning point and you want to sell high at a turning point. Now, the beauty of what we do is we can make money whether currencies appreciate in value or depreciate in value. Whichever direction the market goes, you can still make money. If it's going up, we buy low at a turning point and we sell high. When the price is about to go down, we do the opposite. We sell the currency at a high price, we buy back at a low price, and we still make money, right? Whether there's a recession, the stock market is crashing, global pandemic, we can still make money in this industry. The only thing we need to try and master or perfect is knowing exactly when we should be buying and knowing exactly when we should be selling. That is what is key, right? That is what we refer to as entry points and exit points. Entry points and exit points. So when should I buy and when should I sell? If we can master that, we will be able to make money Monday to Friday throughout the year. No matter what is happening in our economies, we will still be able to make good money, right? Now, I'm going to ask you guys a question. If you are a trader, if you are an existing trader, just type yes. If you're not a trader, type no. On the comments, there should be a group chat there. If you are a trader, type yes. If you're not a trader, you're new to this industry, type the word no. So if you are a trader, just type yes. If you're not a trader, type no. I see a yes. I see a yes. I see a yes. I see a yes. I see no. I see yes, 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 no, 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 yes, no, no, no. So I think there's a mixture. There's a mixture of people who are traders, and there's also people who are not traders, which is great, which I believe is great. It's absolutely great. And I believe those of us who are already traders, the reason why you're on this webinar is I'm quite sure you are struggling to make money consistently. That's why you're on this webinar. If you are a trader, you are struggling to make profit consistently. You make money today, you lose it tomorrow. You make money today, you lose twice as much as you made. I know that's what a lot of us are probably going through. And those of us who are not traders, I believe by the time we've done this with this webinar, you will be empowered, encouraged to get started. Now, I want us to focus on some mistakes that traders make, right? I'm going to give you something very powerful that I need you to note down. But before I get to that, I want to explain this part. When we start trading, we trade through a brokerage firm. In order for you to access the Forex market, you need to trade through a brokerage firm. There are a number of different Forex brokers out there, right? There's a number of different brokers that are out there. But what's important is this. I want you to understand the function of a broker. A broker is a financial institution. It's a financial institution that gives you a platform for you to be able to access the Forex markets. That's what a broker does. That's the purpose of a broker. Now, remember what I said when I was defining Forex. I said it's a decentralized market, meaning I don't need to meet up with Samuel face to face in order for us to trade currencies. I can be sitting in South Africa, click the button sell, and Samuel clicks the button buy. I can be sitting in Dubai and click the button buy, and somebody anywhere around the world could have clicked the button sell. And how these transactions take place, it is through brokerage firms specifically for retail traders, right? A Forex brokerage firm basically facilitates our transactions into the market, right? They give us a platform where we are able to trade, with each other. Hence why I can be sitting in my office at home, click the button buy. I don't even need to know who clicked the button sell. What's important is that for every buyer in the market, there's a seller. For every seller, there's a buyer, right? For a transaction to take place, there must be a buyer and a seller. Now, here's the thing. For those of us who might be losing money all the time, I want you to understand something. If you sold on a specific trade and you lost money, remember something. Somebody bought. And if somebody bought, you sold, both of you did not lose money. If you sold and you lost money, that person who bought made money. In other words, every time you lose money, that should encourage you that the fact that I'm losing money means somebody's making money. The question you then need to ask yourself, what is it that these people are doing right that I'm doing wrong? And I believe that's one of the reasons why we're on this webinar. I want to give you guys something very simple but powerful. A trading plan, right? A lot of traders are losing money every day in the markets because they are not prepared. In any business you get into, you gotta plan. It's like going to war. It's like when you get into the market, it's like you're going to war. You can't go to war and then try and figure things out when you're in war. What should we do? It doesn't work like that. You sit down, you plan for war, then you go to war, right? A lot of people do the complete opposite. That's why they lose money. They just take money, put into a trading account, then they try and figure things out when they're sitting in front of a trading account. That's the wrong approach. You want to sit down and plan your trades. And once you are confident of your plan, then you get into the markets. Then you go and put in money in a trading account. So I want to give you guys something called a trading plan. This trading plan is like the blueprint. It's the blueprint. If you have a solid trading plan, I'm confident you will have a completely different experience to those who keep losing money. Now, your trading plan is like your business plan, right? If you're starting a business, you got to have a business plan. If you start trading, you got to have a trading plan. And the reality is, I'm quite sure a lot of us that said we are already traders, most of us don't have a plan. I don't even need to ask. I'm confident of that, right? Because most traders don't prepare. Right now, how must a trading plan look like? Please write this down. Step number one, when it comes to a trading plan, the first thing you need in your trading plan is your goal. Number one, it's your goal. What do you want to achieve in the next 12 months? How much money do you need to make that goal a reality? It could be that you want to buy a new house. How much will that house cost you? Write that down. It could be that your goal is to buy a new car. How much will that car cost you? Write that down. It could be that your goal is to get married. How much will that wedding cost you? Please write that down. Write the amount. Be specific when it comes to your goals. A lot of people normally come to me and say, Sandile, I just want to be financially free. What is financial freedom? Because my definition of financial freedom might be different to you. And I believe we need to be specific. Let's not be blurry that we just want to be rich. What is your definition of rich? How much money will you need to have in order to be confident and say, I'm rich? Because my definition of rich might be different to the next person. So whatever your goal is, write it down. So I'll give you an example. Give you an example. Let's say I want to make 120,000 US dollars, which is more than a million in South Africa. I want to make 120,000 US dollars in the next 12 months. That's just an example, right? Once you've written that amount or that goal down, I want you to then divide it by 12 months in a year, right? So for the next 12 months, I want to make 120,000 US dollars. I'm going to divide that by 12 months. Why am I dividing it by 12 months? So that I have a monthly goal, that in a month, I need to make 10,000 US dollars. If I can make 10,000 US dollars in a month, over a period of 12 months, I'll make this 120,000 US dollars. So that's my monthly goal, 10,000. What I'm then going to do is I'm going to take this 10,000 US dollars divided by 4 weeks in a month, which will then give me my weekly target. That in order for me to make this 10,000 in a month, in a week, I just need to make 2,500 US dollars. If I can make 2,500 US dollars every week for 4 weeks, I will reach my monthly target of 10,000, and obviously it will add up to my 120,000 for the year. So that's my weekly goal, 2,500 US dollars. Then I'm going to divide that by 5 trading days in the week. Remember, we trade Monday to Friday. So I'm going to take this 2,500 US dollars divided by 5. It therefore means in a day, I need to make 500 USD. That's it. 500 USD is almost 8,000 Rand in South Africa, and I believe it will be the same in Swaziland as well, right? So I need to just make 500 US dollars a day. If I can make that Monday to Friday, I'll make 2,500. If I can do that for 4 weeks, I'll make 10,000 US dollars, which is more than 160,000 Rands. And obviously multiplied by 12 months, that's my yearly goal. So that information must be in your trading plan right at the top, not at the bottom, right at the top. It's the goal divided by the amount of months, weeks, days until you have a daily target. Now, this is where it gets interesting, right? This is where it gets interesting. Now, all of a sudden, we're now taking our goal, we're taking this goal and we're plugging it into our trading platforms. We're now putting it into the markets. How? We can now say, okay, for me to make 500 US dollars in a day in the markets, what must be my leverage? That's when I now start, preparing my journey. That's when I start planning my journey. For me to consistently make 500 US dollars in a day, what must be my leverage? That's number one. Please write it down. I'm going to explain to you what is leverage. Number two, what must be my pip value as I trade? What must be my pip value? That's the second thing after leverage for me to make 500 US dollars every day. Number three, what must be my volume, my lot size, in order to be able to make 500 US dollars every day? The 500 is just my example that I'm giving you, right? Yours might be a little bit different. What's my leverage? What's my pip value? What's my lot size, which is volume? You can just write volume. Those are 3 very important things that I need to calculate before I even place my first trade. So I'll give you an example. I could be, for argument's sake, trading with a pip value of $25. So I'll be making about 25 US dollars per pip. That obviously means I just need 20 pips in a day for me to make 500 US dollars. Does it make sense? Now, let me quickly explain to you what is leverage. Very important. Leverage will make or break you. When you register a new trading account, you get to choose your leverage size, right? Some people choose a 1:10. Some people choose a 1:50, 1:100, 1:200, 1:500, 1:1000. There's different options, right? You will decide whatever is suitable for you. But what's important is this. Leverage is a facility that a broker will give you in order for you to be able to enhance your initial investment, in order for you to be able to magnify the outcome of all of your trades. So hence why we say leverage is similar to credit, but it's not credit that you need to pay back. Leverage basically allows you to get a bigger exposure, get more access into the market. So for example, if I go and choose or set up my account on a leverage of 1:10, it means for every dollar I'm going to put in, doesn't matter how much, whether I put in $1,000, $10,000, $100, every dollar that I'll put in my account, I will be able to trade currencies that are 10 times that amount. Does it make sense? So in other words, if I go and put in $1,000 in my account, even though I funded $1,000, I will be able to trade 10 times $1,000, which is I can trade currencies worth $10,000 because of the leverage of 1:10. If I choose a leverage of 1:100, even though I've put in $1,000, I'll be able to trade 100 times that, which means I can trade $100,000 worth of currencies with only $1,000, right? Now, this automatically should tell you that leverage will allow you to make bigger profits with a small amount of money. But at the same time, leverage can cost you a lot of money. So if you choose a high leverage, two things are going to happen. You're going to make a lot of profits when you have a successful trade, but when you lose a trade, your losses will also be massive. That's when you choose a high leverage. If you choose a low leverage, your profits will be small, your losses will be small. So you might be sitting there and thinking, so Sandile, what must we do? You want to choose a reasonable leverage. You don't want to choose a high leverage. You want to choose a reasonable leverage. What is a reasonable leverage? This is what has personally worked for me. 1:100. I would recommend it even to a beginner. Even a beginner, I would say 1:100, you're on the right path. I don't go anything above that, right? I'd rather go a little bit lower, but I don't go anywhere above that, right? I don't go to 1:200, 1:500, 1:1,000. For me, it's suicide, right? By the way, I've got about $4.9 million US in my account, but I still can't afford to go higher than that. And I always see people with a small account and they'll go for 1:1,000. Then they wonder why they blow their accounts all the time. So I'm going to share my screen with you and show you. So that was just a definition of leverage. So I want to show you something else. That was just the definition of leverage. I want to share with you something very interesting. I'm going to quickly log into our company website. And part of me logging into our company website and sharing this with you, you're not going to see my face right now, but you're going to be able to see my screen in a second. Here we go. So part of what we do as a company and what I do as an individual is to provide people like yourself with tools that will simplify this trading, right? So one of the tools I'm going to show you right now is a calculator. And the purpose of this tool, it is to help you manage your risk a little bit better. Now, what most traders don't realize is one of the most important things that we do as traders is manage our risk. You can have the best strategy in the world or best technique. If your risk management is poor, you're not going to be successful, right? So the first thing you want to put in here is your capital in dollars. I'm just going to make an example using $1,000 US. By the way, you don't need $1,000 US to start trading. You can trade with any amount, right? Then below that, I need to put in my position leverage. Now that word position is important before the word leverage. Why am I saying it's important? Because here we're trying to calculate our risk per trade. We're trying to calculate our risk per trade, per transaction. So now I need to decide based on my risk appetite, how much of my leverage do I want to apply in this calculation? Remember, I said I use a leverage of 1:100. Now, per position or per transaction, I'm not going to apply the entire 100 because that will ultimately mean I'm risking my entire balance, and that's not what I want to do. So I could, for example, say I want to use 5% of my leverage. That is 5% of 100, right? I could maybe say I want to use 8% of my leverage or 3% of my leverage. So I can choose any number here because we're trying to calculate risk to take per position, per trade. So there's no right or wrong answer here. It just depends on, how much risk do you want to take. So I'll for example, go for 5% per transaction, nothing more. Then below that, I need to state my performance. What percentage do I want to make every month? I'm going to go for about 50%, which is not too high, neither is it low, right? Now, there's no limit when it comes to how much money you can make. The only thing I want you to be aware of
is the more money you want to make, the more money you're going to have to risk. So I'm just going to go for 50%. Now look what happens. Immediately, our smart calculator tells you, if I start with $1,000, I'll make 50% every month. Month one, I'll be sitting with 1,500. Month two, I'll be sitting with 2,250. Month five, I'll be sitting with over 5,000 US dollars. By month nine, I'm sitting on 38,000 US dollars. By month 12, I've reached my target of 120,000 US dollars. In fact, I'm sitting on 129,000 US dollars. So this is part and parcel of what I was saying must be in your trading plan, your yearly goal. So this is my yearly goal, where I want to be by month 12. And obviously, this month 1 to month 12 is like a timeline of where I must be by month 1, month 2, month 3, month 4. And obviously, there's compound interest. That's why it grows so quickly. That is where I want to be, starting off with 1,000 USD. Now, that is the goal. Those are projections. Now, what I want to zoom into or focus on is what I want to focus on quickly is how are we going to make that a reality? How are we going to achieve that? That is why on the left-hand side, we have something called a pip value. We have a daily target in pips, which I said must be in your trading plan. My monthly target, my yearly target in pips though, right? So let me quickly explain this pip value. I've already explained to you what is a leverage. Now I'm going to jump onto my trading platform. So this is the software that I use to buy and sell all of these different financial instruments, from Forex, which is currencies, to stocks, to indices, to commodities, even cryptocurrencies. I can trade on the very same platform, right? What I've opened up for you guys tonight here, this is an example of a euro against the US dollar, right? I was actually trading this earlier on before I started this meeting with you guys, euro USD. So this is my trading account. What you're seeing on my screen is a chart of a euro against the US dollar. Hence, I was pointing on the top left-hand corner. So all of these objects that are moving up and down, we call these candlesticks. However, I've got green candles and I've got red candles. Now, just to quickly bring those of us who are new to trading up to speed, my green candles are indicating that the market is bullish. And the market being bullish, it means the market is going up. So every single green candle you see here is telling us the price is going up. And the opposite is true for the red candles, which is the red candles are telling us the market is going down, of which when the market goes down, it means it is bearish. So when the market is going down, it means the market is bearish. Right, so these are words that you want to write down and memorize. Now, what market am I talking about? What market am I talking about? I'm referring to this. So the very last candle on the right-hand side will always be representing the current price. You'll see that that last candle on the right is at the same level as this solid gray line, not the dotted gray line, the solid gray line. So you'll see that as I'm speaking to you, if you follow that gray line across the right-hand side, there's a number there. That is the current exchange rate. So if I wanted to buy 1 euro, I would have to pay so many US dollars. And all the candles before that, this is the historical prices. And you'll see at the bottom, there are dates and times there. Now, let me just quickly explain this. This is still part of basics, right? For me to get 1 euro, I must pay $1.16795. That's what that exchange rate obviously means, which I think is very basic. So for me to get 1 euro, for me to be able to buy 1 euro, that's how many dollars I need to obviously pay. Now, this will then mean that if I bought somewhere there at that candle, I would have paid 1.175 something dollars to get 1 euro. And obviously, as these candles went up, as the market began to go bullish or move in a bullish direction, it means the euro I bought there started becoming worth more. Look at the price on the right-hand side. The euro started becoming worth more more and more and more and more up until we got to that level, correct? Now, by the time we got to that level, the second line that I've just placed now, look at now the value of the euro that we bought there. When we bought there, it was worth 1.17545. When we sold at that candle, the same euro we bought there is now 1.1847. Now, here's what I'm trying to actually explain, which is when currencies move, either moving up or moving down, the change in value of currencies, we express that using what is called pips. We never ever say the market has gone up by so many euros or the market has gone down by so many pounds. Whenever the market moves either up or down, we say it has moved up by so many pips or it has moved down by so many pips, of which pips are basically points. That's what pips are. They are simply points. That's it. Nothing more, nothing less. So it's the same thing as calculating the distance from home to work, right? If you want to know how long is it from where you stay and where you work, your office, you'll probably calculate that in kilometers, right? When we trade, we say from where we're buying to where we're selling, there's maybe 10 pips or 40 pips or so on, depending on the distance. So that's why you hear traders saying we've just banked 100 pips. Now, when we calculate these pips, we focus on the first 4 decimals, right? We try not go beyond 4, because once we go beyond 4, it's no longer pips. We are now looking at what is called fractional pips, which are pipettes. So now look at this carefully. On the dotted line at the bottom where we said we were supposed to buy at that candle, the price is there, 1.1754, and then there's a 5. So there are 5 decimals there. So we're not going to go beyond 4. I want to just quickly show you how to calculate pips. So I'm going to say the dotted line at the bottom where we're buying, it's at 1.17545. But now that is now 5 decimals. So I'm going to cut out the 5th one. So I only specifically have 4 decimals. And the price where we're selling at the top is at 1.18478. But that is now 5 decimals. So I'm going to cut out the last one. So I have specifically 4 decimals. Now this will apply for all of your currency pairs, not just the Euro USD, for all of them, except a few that will probably have your Japanese yen. But for majority of your currencies or currency pairs, that is, when we calculate pips, we stick to 4 decimals. That's it. So now, all I now need to do is just punch this on my calculator. You can do the same on your side. I'm going to say 1.1754 minus 1.1847. And the answer I'm getting on my calculator is this. This is the answer I just got. 0.0093. Now that is 93 pips. Just to get straight to the point, that is 93 pips. Why am I saying it's 93 pips? Is because there are 2 zeros in front of the 9. If there was a 1, in front of the 9, it was going to be 193 pips. If you take out this 9, that will mean that is 3 pips. But because it's 0.0093, that is 93 pips, not 93 euros. It's simply 93 points. That's it. 93 points. Now, as a trader, I need to know that because I'm putting in real money here, I want to know what's the value of 1 point. What is the value of 1 point? That is now what we refer to as a pip value. That's what we refer to as a pip value. The value of 1 pip, the value of 1 point. Right? Now, the unfortunate reality is a lot of traders don't even know what their pip value is, but they trade every single day. And the question I ask myself as a professional trader is, that means you don't even know how much money you're going to be making or losing if you don't know what your pip value is. Right? Now, your pip value is not a standard number. Let me just make that clear. Your pip value is not a standard number. It's not a standard number. Your pip value changes depending. Your pip value changes depending on your balance. Your pip value will change depending on your leverage. So in this example, this is where our calculator comes in. My pip value here that I've been given in order to achieve these results is 0.5. I need to use a 0.5 pip value, dollars per pip. Now look at this, guys. If I change my leverage, not even my balance, I'm just changing my leverage. If I increase my leverage, look what happens. My pip value is no longer 0.5, it's now $5 a pip. If I increase my leverage again, it's now $50 a pip. Now remember, your pip value doesn't apply just when it comes to making profit. It also applies when it comes to losing money, right? If I'm making $50 every single point going up, it means I'm going to lose $50 every single point going down. So your pip value works both ways. And that's why I was saying when you increase your leverage, you're increasing the money you will make. You're also increasing the money you will lose. So I'm going to take back my leverage to what it was. And hence now the pip value I should be using is 0.5 dollars per pip. Which then means, excuse me, if I want to know how much money I was going to make on this trade, all I got to do is say 93 pips, multiply it, 93 pips multiplied by my pip value, which is the value of one pip, which is $0.5. So on this trade, I was actually going to make, let me just write this on the screen. So specifically on this trade, I was going to make 46.5 US dollars. 46.5 US dollars. So I'm able to calculate the money I'm going to make as well as the money I'm going to lose before I even place the trade, because I know my pip value. I know that if I use that pip value, if I use specifically this pip value, I was going to make 46.5 US dollars. The same will apply to setting a stop loss. Now, when we trade, there's something called a stop loss, right? Which is there to limit the money you can potentially lose. So what I would do as a trader, if I'm buying at this price, every single pip going up, I'm making money. But if the market goes down, I'm going to start losing money. So what we will do as traders, we will go and set a stop loss, right? For example, if I put a stop loss somewhere there, I'm just going to turn this red because it's a stop loss, and I'll put a solid line because we don't want anything to go through. This is not how you set a stop loss. I'm just obviously just placing lines so you get an idea. But I can, for example, say I want to put a stop loss somewhere there. This will mean that if the market doesn't go up after we buy and instead goes down, it will not go lower than my stop loss. Even if my laptop is switched off, I don't have connection. As soon as the market gets to this price, my account will automatically close itself. It will close the trade. This is a function. It's called a stop loss. This is a function that we use to limit the amount of capital we can potentially lose. That is the importance of a stop loss, to limit our risk, to limit our potential loss. Now, your pip value also applies in terms of how do we set the stop loss. So now automatically, if I know what my pip value is, I will immediately be able to kind of set a stop loss depending on my appetite for risk. Depending on my appetite for risk. Depending on my appetite for risk. In other words, if I say, for instance, I want to, I'm prepared to lose $5. I will take my pip value, which is 0.5, multiplied by 10 pips, which will mean I'll lose about $5. Or I'll take my 0.5 multiplied by 20 pips from my entry to my stop loss, and I'll know exactly how much I'll potentially lose. Guys, please don't share your email address with me. I already have everybody's email. I've got everybody's email, so there's no need to share your email. Don't type your email. Don't give me your number. We've got everybody's details. Don't worry. Now, here's another important thing. If I'm about to place a trade, I'm going to click on that green button and I'm going to buy this Euro USD. If I want to sell, I'm going to click on that red button and I'm going to sell the Euro USD. But there's something I want you to note here carefully. Every time I either buy or sell, there's something called volume. There's something called volume. Every time it pops up. Currently it's on 5.0. If I buy, there's also volume. Your volume is the third thing that I said must be in your trading plan. Number one, I said your leverage, which I've explained what leverage is. Number two, I said pip value, which is what I've just explained to you. I've explained what are pips and pip value. Number three, that must be in your trading plan is your volume. Now, write it down. I'm going to explain to you what is volume and the importance of this volume. Whenever you place a trade, guys, when you're about to place a trade, this is what I want you to understand. When you place a trade, it's like walking into a shop. When you place a trade, it's like walking into a shop. When you walk into a shop, you need to decide how many pairs of shoes do you want to buy. That's quantity, right? How many pairs of shoes are you going to buy? If you walk into a dealership and you want to buy a beautiful sports car, which I believe we're all going to be buying in a very short space of time, you need to decide how many cars are you buying. You know, if you're buying property, how many units are you buying? So if you're buying something physical that you can hold, touch, feel, and smell, you're able to literally point the number of whatever items you are buying, right? But when it comes to trading, because we are trading online, we can't physically touch the euros. We can't physically touch the dollars or state physically how many euros or how many pounds we want to trade. That is where your volume comes in. So your volume is what we use as traders to determine the quantity of the currency we are buying. So in other words, if I want to buy a lot of euros, all I do is I increase my volume. If I want to buy less euros, I decrease my volume. Now, here's the thing. This 5 doesn't mean I'm buying 5 euros. That actually means I'm buying 500,000 units of the euro, because that is a 5 standard lot. If I choose 0.5, that'll mean I'm buying 50,000 units of the euro. If I use 0.05, it means I'm buying 5,000 units of the euro. So this is where a lot of people get caught out, and this is where a lot of people mess things up, the volume. So don't just think a number 5 is a small number, let's go and buy. You're going to lose your money. So you want to be careful when it comes to volume, because if you increase your volume, you are increasing the amount of units you are buying. You're obviously increasing the amount of capital you must put into that trade, and obviously you are increasing your risk. If you decrease it, the same applies. So what I want to do tonight is to give you a very basic formula that you can use to calculate your volume. Now, in order to get my volume, it is very simple, ladies and gentlemen. You take your pip value and you divide it by 10. That's it. You're done. Finished. Take your pip value divided by 10. Now, remember, as soon as you start using our company calculator, you don't need to stress about the pip value because it's given to you. So all you do is you log into our company calculator. You put in how much your capital is. You put in your leverage, how much you want to make. Immediately, you'll be given projections for the whole year. Then you are given a pip value. So currently, my pip value is 0.5. So what do I need to do? I just take the 0.5, which is my pip value. I divide it by 10 in order to get my volume, the quantity I must trade. So if I divide 0.5 by 10, the answer I will get is 0.05. That must be now my volume. How did I get this 0.05? All I did is I logged into our company calculator. I put in the size of my account, my leverage, how much I want to make in a month percentage-wise. Then the calculator will work out a pip value for you. So my pip value is 0.5 divided by 10. That's how I got the 0.05. So immediately, I'm now making what is called an informed decision when I trade, because I know very well I can't take a trade with 5.0. It's too big. So what I now need to do, because I now know how to calculate my volume, I now need to decrease that, my volume. I can't even take a trade with 0.5. That's a mini lot, right? That is 5 mini lots. So I need to decrease it further to micro lots, which is 0.05. Now I can take this trade with 0.05 because that is an appropriate risk, right? That is a type of risk that I can afford to take based on the size of my account, based on my leverage as well. Right, guys, if you get your volume wrong, believe me when I say everything is going to be a disaster. If you get your volume wrong, everything is going to be a disaster. Right. Ladies and gentlemen, if you've been following, please let me know in the comments. If you've been following and you're understanding, let me know. Let me know in the comments. Now, there's one last thing I want to show you here. Remember what I said. You must have a daily target. You must have a weekly target. You must have a monthly target. You must have a yearly target. Now, here it goes. Here it goes. Let me just quickly open a calculator for you guys. Look at this. Look at this. I'm given a daily target in pips by our calculator. I'm given a monthly target in pips. Now, remember, I'm starting off with $1,000, right? And I say I want to make 50% every month. Now, for the first month, 50% of 1,000, which is what I'm starting off with, is 500 USDs, right? It's 500 USDs. Now, my calculator is telling me I must use a pip value of $0.5 with a monthly target of $1,000. So I'm going to do, pips. I'm going to say 1,000 pips. 1,000 pips is my monthly target. I'm going to multiply by my pip value. Multiply by 0.5. How much is that? 500 US dollars, which is how much I need to make per month or on my first month. Now, look, our calculator also gives you a daily target of 49 pips. Now, look at this. If I say 500 US dollars divided by 4 weeks in a month, it means in a week, that's how much I must make. Divided by 5 days in a week, it means in a day, I must make about $25. Now, look at this carefully. If you say 0.5, which is my pip value, let's type it in. 0.5, which is our pip value, multiplied by 49 pips. Not 49 trades, 49 pips, which is my daily target, times 49 pips. That means, which is 49 points, it's almost $25 that I need to make in a day. And obviously, if I make 1,000 pips in a month, with that pip value, I'll be able to make the $500, which is the 50% of my initial capital. Right, I see a lot of people saying I'm following. Awesome stuff, very fantastic, well understood, following. Awesome. I see some great feedback there. I see some really great feedback, encouraging feedback. Right. So everything I was explaining to you guys there is part of our trading plan. Now, this information, it is key. I can't stress that enough. It is key. It's important, right? Why I say it's important is the mistake a lot of people make when it comes to Forex is a lot of people, the mistake they make is they just decide when they're sitting in front of their trading accounts as to what volume they must use or what pip value they must use or how many pips they must target, right? Anybody who's doing that, that is a result of not having a plan. If you've got a trading plan, you don't make last minute decisions. If you've got a trading plan, you don't decide when you're sitting in front of your account whether you should use a 0.5 or a 2 lot size, or everything must be in your trading plan. So when I take a trade, I look at my trading plan and I say, based on my trading plan and based on the size of my account, I should be using a lot size of 0.05, and I stick to that. Based on my trading plan, every single day, I must target 25 pips. I don't care how many pips other people are making, because I'm not other people. I'm not following the masses. I'm not a sheep. I'm following my trading plan. I don't care what people are saying on Facebook. I'm not following those people. I don't care what people are saying on Telegram. I have a plan which is based on my goal for the year. And if my goal says I must make 25 pips a day with a lot size of 0.05, with a pip value of $0.5, with a leverage of 100, 1:100, I stick to that. Because it's all about what I want to achieve, not what Sandile says, not what another trader says. That is what separates gamblers from traders. Traders have a plan. And guess what? You have to plan your trades and you have to trade your plan. I'm sure you're not hearing that for the first time. Plan your trades and trade your plan. Don't trade what you see on the internet. Plan your trades and trade your plan. That is the message that I want. I want you to write that down. Now, that is the foundation of our trading plan. That is the foundation of our trading plan, but it does not end there. It does not end there. Does not end there. Right? We now need to go a step further and say, okay, that is my risk management, which is the foundation. Now, the second phase of our trading plan, or phase 2 of our trading plan, is how do we decide whether to buy a certain currency, or how do we decide whether to sell a certain currency? That is where analyzing comes into play. We need to learn how to analyze different currencies. Guys, I did mention this. Please don't give me your emails. I did mention this. Please don't type your emails. Don't type your emails. Don't type your email. Don't give me your email. Don't give me your number. I've got everybody's email. I've got everybody. That's why you had to put in your email when you're registering for this webinar. So we've got everybody's information. Let's just focus for now. That's it. Just focus. Take down notes. Don't send me any emails. Don't send anything. We've got your information. We will get in contact with everybody. Let's just focus for now. So we want to analyze. We want to analyze in order to be able to know exactly whether to buy a certain currency or whether to sell a certain currency. Now, there are 3 different ways of analyzing the market. There's what we call technical analysis. Please note it down. Technical analysis, that's number 1. Number 2, it's fundamental analysis. That's another way of analyzing. Number 3 is what we call sentiment analysis. After you write down sentiment analysis, do me a favor, cross it out. I know you're probably not expecting that, but please do. I'm serious. Write down technical, write down fundamental, write down sentiment, and then cross out sentiment. We don't want to use sentiment analysis when we trade. And I'm going to explain to you why. We don't want to use that. We want to scrap it out. But we just want to know what it is, understand it, but we're not going to use it. Right? We just want to be informed. Here we go. Here we go. Number 1, what is technical analysis? What is technical analysis? Now, before I go a step further and explain it, I want you to write this down and understand what I'm about to say, right? You will be able to read in between the lines if you're really focused. The markets are traded by human beings. The markets are traded by human beings. Very important. The markets are traded by human beings. What do I mean? I'm the one sitting in front of my account and trading every day. Someone else might argue and say, but Sandile, there are institutions as well. The question is, in those institutions, in those banks, in those hedge funds, in those asset management firms, are those aliens or humans? Those are humans, right? All of us participating in the markets, we are humans. Now, there's something very interesting about human beings. Human beings have got a tendency of following routines and sticking to routines. Once a human being understands a certain routine or adopts a certain habit or adopts a certain behavior, a human being will stick to that for a very long period of time. That is one of the reasons why we always say in the markets, history has a tendency of repeating itself. You know, whenever the market does this, I promise you it will do this almost every single day, because the markets are traded by humans. Humans, the human behavior is predictable. And if human behavior is predictable, it means the markets are predictable. I can predict what time Victor is going to wake up tomorrow. I can predict what time you're going to be going to bed tomorrow, right? I don't need to be a genius to do that. All I need to do is I need to spend 1 or 2 months with you. That's it. I just need to spend 2 months with you. I shadow every movement you make. I follow every step you make. I monitor what time you wake up, what time you have lunch, what time you leave work, what time you get to bed, what time you have dinner with your family, what time you pray, what time you work out, all of those things, even your favorite restaurants, your favorite, shopping centers, and whatever the case might be. If I can monitor that for a solid 2 months, I can be in a position where I can tell you right now that, hey, this individual, Kenneth, will be doing this at 12 o'clock tomorrow. So and so will be doing this at 5 o'clock tomorrow. Sandile is going to be stuck in traffic at 6 o'clock. He's going to be having dinner with his family at this time. At that specific, I can even tell you what restaurant you're going to be sitting at. Why? Because human behavior is predictable. So I'm no longer guessing. I know a lot of people normally say, but is trading not guessing? It's not guessing, because I am reaching a conclusion of what you're going to be doing tomorrow based on historical data. I'm not just guessing, based on history, based on facts, right? Based on factual information. For the past 2 months, every single day for the past 2 months, you go to the same restaurant at the same time because your lunch at work is at the same time every day. So that is predictable behavior. The same applies when we trade. The same applies when we trade. That is why technical analysis is so powerful, because it is based on patterns that the market makes, right? Whenever the market moves, let me actually take you to the charts. Whenever the markets are moving either up or down, right? Whenever the markets are moving either up or down, it is easy, guys. It is easy to predict what the market is going to do next. In the beginning, you might find it a little bit difficult or a little bit intimidating or complicated. But after a short period of time, you start realizing it is so predictable. Anybody can do this. Let me show you something quickly. It is so predictable. So what happens is that if you're still new to trading, all you're going to see is candles. If you're new to the markets, all you're going to see is candles, 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 candles. That's it. However, once you start trading, it changes. Let me show you something very basic and simple. In fact, let me see if I can get you a better example. I want to show you guys something very simple, basic, straight to the point. I want to find a very simple example for you. All right, here we go. Look at this. I'm gonna teach you something in 2 minutes. I'm gonna teach you something powerful in 2 minutes. When the market moves, number one, it will never move in a straight line. Very important. When the market moves, it will not move in a straight line. In other words, it's not just gonna shoot up or shoot down. It moves in and forms patterns as it moves. Now, what you see there at the bottom, that's what we refer to as a low. And what do we do at a low? We want to buy at a low. That's a low right there. That's a low, right? After that, look what happens. The market forms another low. But this second low, we no longer call it a low. We call it a higher low. This is no longer a low. You'll see that the market started here, went up, formed what we call a high. Let me just label that quickly. And I'm going to use the color green to highlight the highs. So what happened here is the market started from my low, shot up, it creates a high. Why do we say it's a high? It's the highest point the market reached before it started going down. And when it went down, look at this, very important. When it went down, it did not go down to where it started. It did go down, but it created what we call a higher low. Why do we call this point a higher low? Is because even though it's now a low, it is higher than the previous low. And after the market creates a low, what it will generally do is it will go up. When it starts going up, it will go higher than the previous high, and it forms what we call a higher high. It forms what we call a higher high. This is basic market structure, market behavior. This is now a higher high. After it forms this higher high, guess what? It will go down again. When it goes down again, believe it or not, if the market is still going up, the next low needs to be higher than the previous one. So it needs to go and form another what? Another higher low. It will keep doing this. Follow me, follow me, follow me. After it makes a higher low, it must go above. It must go higher than the previous high to form a higher high. It forms a higher low. It forms a higher high. It forms a higher low. It forms a higher high. Ask me one question. How on earth did I know that the market is no longer going up at this point? It's because, can we see that this is a higher low? This is a higher low. This is a higher low. This is a higher low. Follow me carefully. This is a higher low. How did I know? How did I know that after we reach this point, we're no longer going up? The market is going to start going down. Because when it went down, when the price went down here, it went down to a point that it reached the level of the previous low. Now, if the market goes so down that it reaches the same price level as the previous low, it means we're no longer forming a higher low. We're now about to form what is called a lower low. Once the market starts forming what is called a lower low, it means we're no longer going up. So all of a sudden, I now need to start selling, or I need to now start closing my trade, because this point is no longer a higher low. This is now this is basic market structure. And what generally, let me just give you guys a summary. What generally happens is this. If the market is bullish, write this down. If the market is bullish, the price creates higher highs and higher lows. That's what the market will do, so long as it's bullish. If it's going up, it will maintain this throughout. Higher highs, higher low. Higher high, higher low. Higher high, higher low. So long as it's doing that, you know the price is going up, it's bullish. The minute it changes the structure and starts forming the opposite, this is what will happen. Instead of forming higher highs, we will start forming lower highs and lower lows. And that's when you know that we're no longer bullish, we are now bearish. It means we're now going down. This is basic market structure, guys. This is technical analysis. Basic market structure, technical analysis. Right. Basic technical analysis, market structure. Now, what generally happens is this, ladies and gentlemen. When the market moves, whenever the market moves, it creates patterns. It creates patterns, it creates trends. And what we do as retail professional traders is we study these patterns. We study these patterns, right? There are so many different patterns, you know, from your basic patterns like your head and shoulders, your double tops, your flags, your wedges, your pennants, your harmonic patterns, you know, your there's so many different patterns. But all of this information I'm giving you and showing you, to be straightforward, you know what happens is we study these patterns. And remember, let's go back to what I was saying, which is the markets are traded by human beings. And human beings, you know, they are predictable. The markets are also predictable, because all you're going to do as a trader is study these patterns. You know, if the market does this, somebody who's never traded will just see candles. But somebody who's learned these patterns, will know that when the price does this, that's called a double top. Somebody who's learned these patterns will know whenever the market does this, that's a head and shoulder, or an inverse head and shoulder, or a cipher harmonic pattern, or a flag, or a wedge. You study these patterns. And the reason why we study these patterns is, remember, human beings repeat the same behavior every single day. And hence, if the market forms this, and we know what this means, guarantee you this movement is going to happen again tomorrow or the following day or the following week. So all I got to do is learn that whenever this happens, it means the market is going down. That's a double top. So when I see this tomorrow happening, I will know that, hey, I'm not seeing this movement for the first time. I actually know what this is called. It's a double top. And whenever double top forms, the market goes down. Therefore, I need to sell. Then I need to study another pattern that whenever the market does this, it's called a head and shoulders. So once I know a head and shoulder means the price is going down, when I see it in future, I will know I need to. That is what technical analysis is all about. That is what technical analysis is all about. Don't let people confuse you and intimidate you and try and act as though they are smart by throwing all of these big names, Elliott waves, harmonic patterns, this and that. People are just trying to act smart. But at the end of the day, it is simply patterns. It is simply market behavior. It's price action. Don't allow these big words to confuse you. It is simply patterns. That's it. It is simply patterns, and that's it. And all you got to do, learn these patterns, master these patterns, learn how to identify these patterns so that you can trade confidently using technical analysis. Number 2, fundamental analysis. What is that? What is that? How does it work? Fundamental analysis, that's when we're no longer focusing on the charts. Technical analysis is all about us monitoring the movement, the behavior, the patterns of currencies using our charts. That is technical analysis. But in fundamental analysis, fundamental analysis, we're no longer interested in what is happening on the charts. We close our charts when it comes to fundamental. Fundamental analysis, that's when we open the news. That's why you see all of this behind me. The news, that is fundamental analysis. That's when we now want to know what is it that is affecting the pound to appreciate? What is it that is affecting the dollar to depreciate? So when it comes to fundamental, you can just say in brackets, fundamental, it's the news. Now, there are three very common factors, that we focus on in fundamental analysis. In other words, when we watch the news, we're not watching anything and everything. We are very specific in what we are looking for, right? So there are three very common factors. Number 1 is the economic factor. Economic factor. How is the economy of the UK performing? How is the economy of the US, Japan, Nigeria, Canada, Ghana, Swaziland, South Africa, the economy? So that's the first factor that we want to focus on, economy. The second factor is political, right? Is South Africa stable politically? Is Nigeria stable politically? Is German stable politically? Whatever currency we want to buy or sell, we want to look at that when it comes to the news. Firstly, is economy. Secondly, is political. Then the third factor is social. Social will include things like crime and so on. So those are three main factors we want to look for. Now, the beautiful thing about, what I've done over time is on our website, we've actually built in an economic calendar to try and make life simple, right? Because, guys, think about it this way. You might be sitting there thinking, so what does politics have to do with a currency? Remember something, guys. A currency, the performance of a currency is a reflection of the country's, of what the country is doing or how the country is performing. So if South Africa is doing well, you will see that based on the value of the rand. If South Africa is not doing well, you will see that based on the value of the rand. right? So now what happens is, we attract, if we are doing something right as a country, what we generally going to do is we're going to attract a lot of foreign investors. And what do foreign investors do? They buy our currency. Foreign investors buy our currency, right? For example, I can be considered a foreign investor in Nigeria. I can be considered a foreign investor in Swaziland, in Ghana, right? Because if I want to buy a hotel in Lagos or in Abuja or in Accra or in Mbabane, I will need to first buy your currency. Before I can buy a hotel in your country, I must buy your currency, right? That is why we say these three common factors, they affect the supply and demand of currencies. For example, if a certain country is not stable politically, I might not consider buying a hotel in that country, right? So automatically, that one factor can affect the number of people that buy your currency or the number of people that sell your currency. If crime is high, that can affect the number of foreign investors that buy or sell your currency. But if your economy is not doing well, like in South Africa, we haven't been performing that good in the past, couple of months. So that on its own is affecting our currency. In the past 6 months, we actually reached the highest, in fact, the worst level in terms of our currency against the dollar. Now, what happens is that we built an economic calendar for you, right? We've built an economic calendar for you so that we make life simple. Now, let me show you something. There's a time zone there, right? I'm in South Africa, so I'm going to choose the time zone in South Africa. So it's GMT +2. Immediately when I do that, it will now give me the times in South African times, right? Now it will tell me the date and the time. So all of this, how much time is left before this data comes out? All of this is done. Done. So I don't need to worry about this. Now this is what I'm concerned about. Right? This is coming out in 40 minutes. This is coming out in 4 hours, Heritage Day. This is coming out, in about 5 hours. So I know exactly but now this is what is important, guys. When it comes to the news that we are looking for, we want to focus on the impact. So you don't just, when it comes to fundamental data, you don't just read up on anything and everything. You want to focus on how much of an impact will this have on the markets. In other words, how relevant is this data? So you'll see that there's what we call non-impact, right? Tomorrow is Heritage Day in South Africa. That is not going to affect the market. That is why it's non-impact. It's not important to what we're doing, right? Now look at this. The trade balance for New Zealand is low impact, right? Exports, medium impact. But now look at this. Monetary policy, high impact. So as a trader, I want to focus on the high impact data. Right. Then the last method of analyzing, guys, is called sentiment analysis. That is the third. So we've got technical, which is studying our charts, looking at the movement of the prices. We've got fundamental, which is reading up on the news, looking at the economic calendar, checking out what is coming out. Is it the unemployment rate? Is it interest rates, monetary policy, all of that information? We want to read on that. We want to understand what impact will this have on the dollar? What impact will this have on the pound? So we even know, if certain information is low impact, I don't worry about, I don't even read that. If it's medium impact, I don't really bother myself. It's only the high impact, data that will affect, the reason why it's called high impact is because a lot of investors are going to make decisions based on that information, right? That is why it's classified. For example, monetary policy, a lot of investors are waiting to read what data is coming out, and they're going to decide on the investments based on that. That is why it's considered high impact. Look at, for example, Heritage Day in South Africa. Nobody cares about Heritage Day, right? It doesn't have anything to do with how we trade. So that is why it's called non-impact. So that is fundamental. For example, if if politically things start becoming unstable in South Africa, a lot of investors are going to want to take their money and leave. So that is why you find that investors are also looking at the politicians, listening to what they are saying, following their policies, decision making, and all of that, so that they can know, are we in a stable environment or are we not in a stable environment? So that type of information, has a lot to do with the type of decisions people make in the markets. Ladies and gentlemen, that was just me trying to summarize and simplify these ways of analyzing. So the third one, which is now sentiment, and that's the one I said you must cross out. It's not important, but I'm going to tell you what sentiment analysis is. Sentiment analysis, remember the word sentiment means opinions. The word sentiment means feelings. The word sentiment means, what I think is going to happen in the UK. What I feel is going to happen in the UK. But sentiment analysis is not factual information. It's opinions, it's perceptions, it is feelings, it's my view. Now, what generally happens is this. There are certain individuals, when it comes to the global economy, that have a voice. There are certain people who we, including myself, listen to whenever they speak. What do they think of this? What do they think? What's their view on the Brexit deal? What's their view on the unemployment rate of the US? Does this individual think the US is going to be able to recover the jobs they've lost during this global pandemic? More than 20 million people that have now been, that have filed for UIF unemployment, all of those things, right? So we want to look at all of that. When we talk about sentiment analysis, it's that. So I'll give you an example. In South Africa, our finance minister, whatever he says, we are listening. Whatever opinions he shares on any platform, whether it's BBC, Bloomberg, whatever our finance minister says, we are listening. Whatever the finance minister says, investors are listening. We are watching. But now the unfortunate part of that is sometimes these people are not giving us facts. These people sometimes are just literally pushing their own personal agendas. That's why for me, when it comes to sentiment analysis, I'm a little bit uneasy with it, because sometimes, I don't want to make financial decisions based on somebody's views. I don't want to make financial decisions based on someone's opinions. I don't want to make financial decisions based on somebody's feelings of how they feel, about a particular subject that has to do with the economy, or that has to do with obviously whatever's happening in the global markets. So that's why I said sentiment analysis, cross it out. We want to make decisions based on facts. We want to make decisions based on concrete information that right now there are so many people that are unemployed in this country. We want to make decisions based on facts that right now there are so many people, that unemployment or poverty or crime or interest rates, or that is factual information, not opinions, right? That is why personally, when I trade, I focus on technical, which is the charts. I use obviously the different patterns to take trades. I focus on fundamental, which is factual data. But I don't pay a lot of attention to basically sentiment. I don't even bother myself with sentiment analysis. I see this as best teaching and trading. All right, thank you so much. Ladies and gentlemen, if you've understood majority of what I've just said, please give me a thumbs up or a thumbs down. If you've understood 90% of the content and the information I've just shared with you, either give me a thumbs up or give me a thumbs down. Let me know. We're not yet at the end of our webinar. There's still a little bit more that I want to give you. I want to give you more. But for now, just give me a little bit of some feedback. Are you guys following? Am I making sense? Am I talking nonsense? Are you understanding? Are you following? Are you lost? Are you confused? Where are you? Where are you? Give me a thumbs up or a thumbs down. Let me know. Awesome stuff. I see a lot of thumbs up. 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 Really, really encouraging. I see a thumbs down there. I see a thumbs up, thumbs up, thumbs up. Yes. Fantastic, fantastic, fantastic. Thank you so much. Thank you so much. Now, something else. Now, what I've done is I've been teaching people how to trade for probably the past probably I'd say about 11. I've been personally trading for about 11 years, but I've been mentoring, I've been coaching, I've been, teaching people around the world, not even in South Africa alone. I've been teaching traders, mentoring traders, grooming traders, probably for the past, I'd say almost 7 to 8 years. But personally, I've been trading for almost about 11 years. In fact, I've just made 11 years in September. Now, what I've realized is analyzing, ladies and gentlemen, as much as I've made it sound easy, as much as I've simplified it for you, but analyzing is not that simple. When I say it's not that simple, it requires you to really, really dedicate yourself. It requires you to commit yourself. It requires you to really invest quite a bit of your time to perfect, what I've just explained to you, right? You can't learn how to trade in 1 week. You can't learn how to trade in 1 month or learn how to analyze in a couple of weeks or days. It takes time. It takes time. It takes time. Because here's the thing, guys, learning these patterns is not enough. That's why even if you sit and watch YouTube for an entire month, you're still not going to start, you're not going to make money. Because learning the different types of patterns, that is just about 20% of what you need. The next, remaining percentage that you need is the discipline, is the psychology, is the implementation. That is why I always say majority of the time, you will not succeed unless you've got a mentor that will hold you by the hand and show you the way. Not just teach you the way, but show you the way. Demonstrate what needs to be done. Not just say what you need to do, but demonstrate so that as I do it, you do it behind me. So as I walk, you walk with me, right? Because I promise you, there's a lot of us who might have been trading for more than a year, more than 2 years, more than 3 years, but I promise you, you probably still lose more money than what you make. Because as I said, knowing what a pattern is not enough. You gotta learn. You gotta learn the discipline. You gotta learn the implementation. You gotta need to learn how to manage. Manage your emotions. That's the psychology of trading. The emotional intelligence of trading, you can't teach it. You can demonstrate it, right? You can't learn it by watching a video. You can't learn it by reading a book. You learn it by sitting down with somebody who's gonna do it in front of you, and you follow what they're doing. And as they do it, and as you do it, over time, you develop the emotional intelligence, the discipline, the patience, the understanding how to implement some of these techniques. And that is one of the reasons why last year I realized that around the world, not even in Africa, not even in South Africa, around the world, a lot of people are trading right now, but I guarantee you a lot of people are losing money right now. A lot of people are learning how to trade, but they're still getting it wrong. And that's why I then realized that one of the major factors is that everybody's in a rush to make money. Everybody wants to make money now. Everybody wants to be a millionaire now. Everybody wants to see results now. And unfortunately, that process of perfecting how to enter and exit trades, that process of learning how to analyze, developing the discipline, the patience, the emotional intelligence, it just takes time. That's it. It just takes time. Guarantee you, you're not going to do it in 6 months. You're not going to do it in a year. It's going to take you time. My first year of trading, absolute nightmare. Nightmare. Worst nightmare of my life. I lost so much money. I was 5 minutes to suicide. It's only in my second year where I started seeing a little bit of light at the end of the tunnel. Towards the end of my second year, I started seeing some sort of consistency. In my third year, that's where I started blowing up. In my fourth year, that's where I started seeing myself as a potential. By the time I hit 5 years, that is only when I started, I was declared as a multi-millionaire. Now, the problem is a lot of people want to achieve this in 4 months. You're not going to do it. But because I want you to succeed, I want you to win. I don't want you to take 5 years to make that million. I don't want you to take 4 years to make that first million. I have built a tool. I've developed a software that will help you make money from now, from today. This software is not a robot. This software, basically, this is what this software does. I have taken my best strategies, my best techniques of analyzing technical strategies, that is, and we have basically automated these. We have built a tool and a software system that scans the market the same way I do it when I'm watching it. Now, remember something, analyzing the market is a repetitive process. It's a routine. Analyzing the market is a routine. A head and shoulder is like this, simple. A head and shoulders, it's the same. A harmonic pattern is the same rules, the same Fibonacci ratios. So it is easy to automate something like that. So we've built a software that analyzes the markets the same way I analyze the markets. And guess what this software does? It tells you whether the markets are going to go up or down. And all you're going to do is take a trade based on what it says and make money. So the reason why we developed this software is so that you can start making money while you are learning and perfecting your skill. Remember what I said, it's going to take you time. So while we're taking this time to master, let's make money. If it takes you 6 months to become the best trader in Nigeria, in 6 months, be making money. Don't wait for 6 months before you start making money. Use this software and make money now. So if it takes you a year to learn how to be the best trader in Ghana, use the next year trading with the software while you are learning. I'm not saying let us not learn how to trade. I'm saying learning will take you time. Use this and make money while you are learning. So here's the software, ladies and gentlemen. It's called the Super T. Not super, Supra. Supra T. One of the most exciting projects I've ever embarked on. So here we go. Forex, metals, commodities, indices, stock. Now look at this carefully. On metals, I've got gold and silver. Look at this. Our software is telling us market on gold, market analysis summary, market analysis summary. Remember what I was saying to you guys. We need to analyze the market before we trade it. Now, this software analyzes the market for you and it tells you market analysis summary bearish. What does the word bearish mean? It means it's going down. And if we know that it's going down, what do we want to do? We want to sell gold. Now look at this. It first gives you the name of the instrument. So the name of this instrument is gold, obviously. The current rate of gold is 1,862.28. You will see that as I'm talking to you, that price is going to be moving because that is live market data. That is the real price of gold. If you go on to and watch the news right now, that is the current live price. As the price of gold moves around the world, it changes on our Super T. And obviously the momentum of gold is going down. Today alone, it has dropped by that percentage. It's going down on those time frames. And if it's bearish, look at this. We can either buy it or sell it, depending on whether it says bearish or bullish. If it says bullish, we want to buy. If it says bearish, we want to sell. So automatically, the Super T tells you sell gold below this price. So in other words, remember what I said, this is the real price of gold. This is the real price of gold, the numbers that are changing, the exchange rate. So all I needed to do is wait for the price of gold to go down until it gets to this price, which is 1,947.84. As soon as the price of gold went one digit, one pip, 1 point below this number, I should have clicked the button sell, and next to this price, which is my entry price, I'm given targets that after I sell gold at that price, this is my first target where I can close my trade on profit. This is my second target where I can close my trade on profit. This is my third target where I can close my trade on profit. How simple is this? How simple is this? How simple is this? Now look at this, guys. Even indices. I know a lot of us love trading the NASDAQ. Look at this, the US 100, which is known or popular as the NASDAQ. Look what it says. Market analysis summary of the US 100, which is the NASDAQ, is bearish. So all I got to do, click on the NASDAQ. Look what it's telling me. Currently, as I'm speaking to you, the NASDAQ is trading at that price. So it's obviously going down. If it's going down, what do we want to do? We want to sell the NASDAQ, obviously, but we want to sell the NASDAQ as soon as it gets to this price level, 11031.7. The minute the NASDAQ goes below this price, we sell it. As you can see that it's already below this price, so we should have sold a long time ago. We should have sold the NASDAQ as soon as we went below this price and closed our trade either on the first target. If we are greedy, close it on the second target. You'll see that the only target it hasn't hit is our third target. So you can trade Forex, metal, stocks. You can trade any instrument with this software. Now let's go back to Forex. Look on Forex. When it comes to Forex, I don't trade anything and everything. I choose the currencies that I trade. Look at this, the US dollar against the Japanese yen. It says bullish, so I'm going to click on it. The US dollar against the Japanese yen, USD JPY, is going up. The current exchange rate of the USD JPY is 105.36. But because it's going up, it says bullish. What do we want to do? We want to buy the USD JPY. But we don't just buy whenever we feel like it or wherever. We buy it at a specific price. So we need to buy the USD JPY as soon as it goes above 105.04. 1 or 2 pips above that price we were supposed to buy. Excuse me. Now look at what price is now trading at. It's already more than 30 pips above the price we were supposed to buy. It has hit my first target, hit my second target, is now going towards my third target. Guys, this is the software that I've put in my own money to develop. It took us a very long time to come up with this amazing, something I'm really proud of. And I can tell you right now, this thing will make you crazy money. This thing will make you crazy money. This thing will make you insane money. This thing will make you so much money, you might not even bother yourself learning how to trade ever again. You might not even consider learning how to trade ever again. The amount of profit this thing can make you, it's insane. It's insane. Now, this is what I'm going to do. Right? I'm gonna take a trade with you guys tonight. Right now. In fact, not even tonight. I want to take a trade with you guys tonight, right now. Why do I want to take a trade with you tonight? Is I want all of us on this webinar to test drive this software, right? I don't want you to just believe what is coming out of my mouth. I don't just want you to trust what I'm saying because I'm known. I'm one of the leaders of retail Forex in the world, but I want you to test drive this software with me tonight. So if you've got a live account, log into that live account. If you've got a demo account, log into that demo account. I want us to trade together live right now. Let's trade together live right now. Once you've logged in, once you've got into your account, just type the word ready. Once you've logged into your account, you're ready to make money with me, just type the word ready. I want it to make money now. Make money. I want every single one of us on this meeting to be so rich in the next 12 months that we don't even know what to do with the money we're going to be making. Log into your account, whether it's demo, whether it's live, it doesn't matter. I'm going to tell you exactly how to get the software towards the end of this webinar. But for now, let's make money. Right now, let's make money. That's all. Let's make money. You know, I personally believe this is my opinion. Men lie, women lie, numbers don't lie. Fact. Men lie, women lie, numbers don't lie. Right? I want you to see results. I want you to see money. I want you to see results. Then decide whether you wanna start trading with me. You want to be part of our community or not. So I see a lot of people typing ready, 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 ready. Here's the deal, guys. Here's the deal. Here's the deal. Those of you who don't have trading accounts, guess what? We're going to hook you guys up with the trading accounts. Those of you who don't have trading accounts, we're going to hook you up with a trading account. In fact, I've organized with our team to give everybody on this webinar a bonus account to start off with. It's a real account. It's just that it's a bonus account. So every single one of us on this webinar, tomorrow, in fact, tomorrow is a holiday in South Africa. So please, my apologies. Tomorrow is a holiday in South Africa. But as soon as we're back into the office, which will be on Friday, our team will contact you and help you set up that trading account. So every single one of us here is going to have a trading account. If you don't have one, don't worry. You already have a trading account courtesy of myself and our company. So everybody's going to get a trading. Even if you already have another trading account, we want you to have another one. We want you to have more. So those of us who already have accounts, let's go and make money. Those of us who already have accounts, let's go and make money. Right, so I'm going to go through a number of different currency pairs here. And I'm going to try and see if I can give you the best one. The best opportunity. I want us to make money. Now, there's one thing you will notice on our Super T. There's one thing that you might have noticed. The volume and stop loss, it's not on the Super T. And I repeat, volume and stop loss, it's not on the Super T. So what you need to do is you need to use our calculator to work out your volume and work out your stop loss. So for tonight, I'm going to need you to calculate that yourself. So if you're not too sure on how to do it, just use the lowest volume possible and use a reasonable stop loss. I'd say about 20 pips plus minus. But obviously, once you start trading with us, we will show you how to use this calculator to get the best stop loss and get the best lot size possible. But obviously for tonight, I'm aware of the fact that you might not have access to our software. You might not have access to our calculator. So I'll just need you to be as careful as you possibly can. Just choose the lowest lot size and let's go. So this is a trade that we can take USD CHF. Let me see USD CHF, USD CHF. Even though we're a little bit late on this trade, because we were supposed to buy as soon as we went above this price. It has already gone and hit our first target, hit our second target. Market is now moving towards our fourth target. However, you might see that I have already entered this trade, but I'm going to enter it again. So all I need you to do, guys, just adjust your lot size. I'm not going to tell you what lot size to use or what stop loss. So you just need to adjust that on your end. So the trade we're going to take based on our Super T is the USD CHF, the dollar against the Swiss franc. And what are we doing? It says here bullish. We're going to buy it at the current price and we're going to use that as our target. So here we go. I'm taking a buy. As you can see, USD CHF, I'm buying. with one lot size. Yo, I've got too many trades that are running. I've got way too many trades that are open, so I'm gonna have to reduce my volume. There we go. In fact, I've got a trade running on the same currency pair. Here we go. So I've entered the trade. Once you've executed the trade yourself, just type I'm in. Once you've executed the trade, just type I'm in. Once you've placed the trade, I've just bought in front of you, as you can see. I've just taken a buy right in front of you. Once you've taken the buy, you can just type the word I'm in. Just type I'm in. Now, the beauty of using this software is you don't even need to worry. You don't even need to worry about what time frame you must take the trade on. The only time you need to be concerned about the time frame is if you are analyzing manually. If you're the one doing the analysis, you're looking for different entry points, that's where time frames are, relevant. But if you're not analyzing yourself and you're just relying on the Super T, you don't need to worry about the time frame because you are given an entry price, you are given a target. That's exactly what I'm explaining there. You don't need to worry about time frame on any time frame. Whether you take the trade on 5 minutes, an hour, on weekly, it makes no difference because the entry price is the same. The target is the same. So whichever time frame you execute it on, it makes zero difference. I hope that makes sense. So let me give you guys a take profit. We've just taken a buy. So what is our TP? Now we've taken the buy. So what's our take profit? We've executed a buy right now. This is the USD CHF. So I'm going to set my TP, my take profit, on this target, which is 0.9248. So I want you to modify your trade and add the 0.9248 as your target. That's our take profit. 0.9248. That's our target. 0.9248. That's our target. Once you've added that target, please let me know in the comments. You can just type modified, modified or done, modified or done. So that is our target, 0.9248. I did mention this a couple of minutes ago that the stop loss and the lot size, you need to work that out yourself. The stop loss and the lot size, you need to work that out yourself. I think you might have missed that, Victor. The stop loss and your lot size, you need to work that out yourself. Reason being is, a stop loss and a lot size is very, very personal. A stop loss and a lot size, that is personal because, I can easily say, put your stop loss at 30 pips away from your target. But if you have used a big lot size, you're going to have a problem. So you can't use, if I'm not the one determining your lot size, then I can't determine your stop loss. Because your stop loss, unlike your target, your stop loss is part of your risk. Whereas the target is part of our profit. So I can tell you where we put the target, but I can't tell you where we put the stop loss because that is part of the risk. However, as I alluded earlier on, that this does not mean you must guess a stop loss or just use any random number. No. That's why I started off by showing you. That's why I started off by showing you what our calculator does. So if you're using a 0.1, how much money do you have? If you don't mind disclosing, because knowing that you're using 1 milli lot is not enough. It could even be that you're using a wrong lot size. How much money do you have? Then I will tell you whether that is wrong or right. 0.1, it's not big, but depends on how much money you're trading with. It all depends on how much money you're trading with. 0.02 is fairly small, but it depends how much money are you trading with. If your account is small, 0.1 can be a disaster. Now, here's the thing. I see that comment of we hope it goes well for us. You see that word, guys, does not apply in trading. We don't hope. In trading, we don't trust. We make calculated decisions. So you must never ever, say, okay, just because Sandile told us to buy, we must now risk everything. That is wrong. Because even Sandile can get a trade wrong. Even the big banks, they get their trades wrong. So never, ever, ever, ever use a wrong lot size just because you trust the person you are trading with. Never do that, because I can get it wrong. I can get a trade wrong sometimes. So that is why your risk management must always be 100% accurate, so that even if something goes wrong, you don't lose your money. You don't lose too much. So I'll give you an example. With the 0.1 lot size on a $500 account, I can tell you right now that is too big, because a 0.1 lot size, that means you are trading with a pip value of $10 per pip. So that automatically means if the market moves by 10 pips, you're gonna lose or make $100. So it means if the market moves with the 0.1 lot size on a $500 account, if the market goes down right now by 50 pips, which is very common, the market can drop by 50 pips, you're gonna lose all your money. You're gonna lose all your money. So that is one of the mistakes a lot of people make. What most traders do, and I'm just mentioning this so that we learn and know how to get it right next time. If you use 0.1, it means every single pip that the market will move by, you will be trading with a lot size, a pip value of $10, which automatically means if you put your stop loss 25 pips, no, in fact, I'm wrong. It's a standard lot. That is $10. It'll be $1. So it's big, but not that big. A standard lot, you'll be looking at about 10 pips. A mini lot will be about a dollar, and a micro lot will be about 0.1, 10 cents. So it's not 0.1 will not be that big. It will not be that big. All right, guys. Anyway, I believe a lot of us are making money right now. Let me know if you guys are making money or losing money. Let me know in the comments if you're making money or losing money. Let me know. Are you making money or losing money? Are you making money or losing money? Are you making money or are you losing money? Are you making money or are you losing money? By the way, it took us less than 5 minutes. It took us less than 5 minutes to use this. In 5 minutes, we are already in profit. In 5 minutes, we in profit. In 5 minutes, we in profit. In 5 minutes, we in profit. We haven't reached our target yet, so let's still be patient. Let's be patient, but we are getting there. So the point I was trying to make is just to give you a taste, give you a glimpse of how amazing and how powerful the software can be, right? This is just a taste, a test drive, a sample of how powerful, valuable, and incredible the software is. Now, it is easy. Anybody can use it. It is user-friendly. You can use this on your cell phone, so you don't even need a laptop to use our software. You can use this software on a cell phone, guys. Cell phone. I'm using it here. I don't know if you guys can see. I use this on a cell phone. I can use the Super T on a cell phone. I can use my Super T on my iPad. I can use my Super T on my computer, on my laptop, any device. And as I alluded earlier on, the idea behind this software is for you to start making money today. I want you guys to start. as we embark, I believe everybody's going to start trading, because remember what I said, we're going to give all of you guys accounts to start trading with. So every single one of us on this webinar, if you don't have an account, we're going to set you up with an account. We'll give you credit to put into that account and start trading. So it goes without saying that all of us are going to start making money. That's a fact, right? So nobody's going to say, I'm not going to trade. Everybody's going to trade. So we want you to use this software. That's what I personally want. I want you to use this, make money, like how a lot of us are starting to make money using this, and not just today. Use this for as long as you can. Use this for as long as you can and trade with it. And the reason why I want you to trade with this software is so that as I begin to teach you guys how to trade, because I did say that it's going to take us time. It's going to take us time. It's going to take us almost a whole year, working together. Some of you might master it in less than a year. Some of you guys, it might take you longer than a year. However, it's going to take us a bit of time for me to teach you all the things that you need to learn before we can comfortably say you're now a professional trader or you're now a successful trader. That process, we just need to be patient with. But what I want you to do is start making money using the software as of now. Now, here's the other good news that I want to share with you guys. So what we've done is we're not going to charge you crazy amounts of money for the software. We're not going to charge you your $3,000 or $4,000 or even $1,000, right? We're not going to charge you ridiculous sums of money to use the software. What we've done is we've broken down the software into 3 different categories, right? So we took the software, we broke it down to 3 different categories. There's a basic, there's a standard, and there's a pro, right? Basic, standard, and pro. I'm going to explain to you what benefits do you get with the basic option, what benefits do you get with the standard option, and what benefits do you get with the pro option. But in a nutshell, all of these different options are there to make you money. Simple. The difference will be the basic option. The basic subscription will give you access to Forex, 11 Forex pairs. That's it. So that is the basic option. You will simply be able to trade 11 Forex pairs a day with the basic subscription. And in terms of the target, the basic will give you about 50 pips, 50 pips to make every single day, which I think is a lot. It's a lot. 50 pips is a lot. So that is basically what the basic subscription will give you. Then we have the standard option, which will give you Forex. It will give you more Forex currency pairs. Then you'll be able to trade gold and silver with the standard. Then the last one is the pro. The pro, you will be able to trade everything: Forex, stocks, commodities, indices, currencies, the list goes on. Now, with the pro, you have about a daily target of 200 pips a day. 200 pips a day. Somebody on this webinar just said to me they are trading with the 0.1. If you're trading with 0.1 and you're targeting 200 pips in a day, it means you can make $200 a day with the 0.1 lot size and you're targeting 200 pips. That means if you subscribe to the pro, you can make $200 a day. That's $1,000 a week, $4,000 in a month. If you, for example, go and subscribe to our standard option and you're using a 0.1 lot size, you'll be making 100 pips with the standard option. The standard option will give you 100 pips. So you'll be making $100 a day with our standard option. And if you go for our basic option, 50 pips with a 0.1 volume, you're making $50. So here's these packages I'm talking about. These are these packages I'm talking about, ladies and gentlemen. Now, the prices you are seeing here, good news for us is these are in rands, not dollars. So all of these prices you are seeing here, these are rands. These are rands. These are rands. These are rands. These are not dollars. These are rands. So for argument's sake, look at this. The basic option, which I said is, will give you 50%. This is our entry level. This is our entry level, the basic, which will give you 11 currency pairs. This is for a month. So obviously you can choose maybe to subscribe for 1 month or subscribe for 3 months. You'll see that as I change the time frames, the prices change. But let me just quickly share with you guys in US dollars. So I'm going to say USD ZAR on Google. So for example, the basic option, which will give you 11 currency pairs to trade in a day, that is 1,499 rands in a month. So that in US dollars, it's about $87. $87. That is the basic. So that's about $87 in a month. So I'll just round it off and say 88. So the basic is 88 USD. My standard, which will give you Forex, it will give you metals. That's why it's a little bit more. So you can trade your Forex, you can trade your metals with the standard. So metals, we are referring to gold, we are referring to silver. So this is 2,499 in a month in rands. In dollars, it's about 146 USD. So the standard is 146 USD. That is the standard. And then the best of the best. Remember what I said earlier on, guys. Remember what I said earlier on is the basic will give you 50 pips a day, 11 currency pairs. The standard will give you 100 pips a day with about, far more trades in a day. You'll get almost about 10, anything between 10 to 15 trades in a day. And you're looking at about 100 pips with the standard. Then the pro is the one where you can trade commodities, you can trade stocks, you can trade indices. So if you want to trade things like your Nasdaq, your Dow Jones, your crude oil, that is the pro, which will give you 200 pips in a day. This is 3,499 in rands. In dollars, you're looking at about 205 USD. So that is the pro. The pro you're looking at 205 USD. Right. Is it Olatunde? That's probably the most funniest comment I've seen in the longest time of my journey. That comment is probably one of the most ridiculous and funniest things I've heard in the longest of times in my journey, because let me read that out loud. Your comment is saying you're not different from people who sell signals, which is not true, because which is not true, because here's the thing. Number one, if you are listening and paying attention, I clearly said we're gonna teach you how to trade. If you are listening and paying attention, we said we're gonna teach you how to trade, but learning how to trade will take you a lot of time. Now, as you're going through the process of learning how to trade, we are saying to you, this software will help you make money right now. It will help you make money right now. It will help you make money right now, right? It will help you make money while you are learning how to do it, right? Nobody said we're not going to learn how to trade. Let's learn to listen. Learn to listen. I said we're going to teach you how to trade, but as we are teaching you, we are saying make money using this. Make money using this, because the teaching part, the learning part, You're not going to learn in 1 month. You're not going to learn in 1 week. So you must learn. And if it takes you 6 months or 12 months, make money in those 12 months, because you can't tell me you don't need money. You need money. That's why you're on this webinar. If you had enough money, you wouldn't be on this webinar. So everybody needs to make money. So we are saying make money while you learn how to do it yourself. You can't tell me, you can't tell me this is not valuable. This is not valuable when everybody's in profit. I think that's the dumbest thing I've ever heard. Everybody is making money on that trade I shared with you guys, and you're telling me that is not value? That's the most insane thing I've ever heard in my life. People are making money right now, not tomorrow. People are making money right now. We took a trade with the software. Everybody on this webinar is making money, and you telling me that's not valuable? That's insanity. That is insanity. That is insanity. We are saying make money as we are doing it right now while we teach you. While we teach you. So let me just post this, guys. Let me post this. So it's not about signals. It's not about signals. It's about us saying trade and learn. Trade and learn. Trade and learn. You guys, think of it this way, guys. Let me just break it down. For those of us who are listening, let me break it down to you. Right? Let me break it down to you. If you go to university, right? If you go to university, the problem with university is that you sit in a class for 4 years. That's the problem with university. You sit in a class in a lecture rather for 4 years, listening, taking down notes, and not making money. That's the problem of a university. Now, what we are trying to do as a company, we are saying, let's not do it like a university. Let us not sit you down and feed you with information for an entire year, right? We are saying, while we're feeding you with information, let's also do it practically. Let's feed you with information. Let's practically do it. Let's trade live, right? Let's trade live. Let's make money. Let's make money and learn. Let's make money and learn. Let's make money and learn. So that is like being in a university that says to you, let's work and learn. Work and learn. Why are we working? So that you can earn money while you're learning. Earn money while you're learning. I think that is the most practical thing that a common person would want to do. You want to make money while you're learning, rather than sitting down for 5 years just taking down notes. You're taking down notes that you're not even sure whether they're going to help you one day. Now, on the flip side, I have shown you guys on this webinar, how this thing works. I've shown you on this webinar the potential of the software. As I'm speaking to you, I'm making money. I'm making money on my account. You guys are making money on your accounts, which means even though we are learning, we are making money. That is basically what I believe is the future of Forex. That is what I believe is the future of Forex. Because here's the thing, guys. You might be sitting there and asking yourself, why are you doing this, Sandile? Why are you doing this, Sandile? You know why I'm doing this? Is because there's a lot of chances in this industry. There's a lot of fly-by-nights in this industry. There's a lot of people that think they know how to trade, but they know nothing about trading. There are a lot of people who talk the talk, but they can't. They can't do it. There's a lot of people that will tell you, I'm a Forex guru. I will teach you how to make money, until it's time to walk the walk. Everybody can talk the talk until it's time to walk the walk. And hence why I believe the only way to differentiate between people who are chances, people who are amateurs, and people who know what they're doing is to do it. Don't just say it, do it. And that is what we did tonight. That is what we did tonight. I've shared information with you, and I didn't just share information with you. I traded live with you. I showed you. You traded live with me, and everybody is making money together. So that's it on my side, guys. That is it on my side. So here we go. I've explained the different packages we have. Now here's the thing. Here's something I wanna share with you guys. I'm gonna drop a link. That you can use to register. I think a lot of us might have seen. You've seen the prices already. So I'm gonna drop a link that you can use to register and get started with us. So there's different ways that you can make payments, right? There's different ways that you can make payments. So the most expensive package is the Pro, which is $200 for a month. That's the most expensive. The cheapest one is our basic option, which is about 85 USD. But the nice thing, guys, is don't focus on how much you are paying. Look at how much you can make with this. Once you realize how much you can make with this, the subscription won't matter. Now, I'm going to do something incredible for you guys tonight. Those of us who are going to register and subscribe, whether you're subscribing to Basic, subscribing to Pro, subscribing to Standard, I'm going to do something amazing for all of you guys, right? In fact, we've got a class, we've got training that is starting this Saturday, and we want to fill up that training class. Normally, I charge a separate fee for teaching people how to trade. There's a separate fee that I charge to teach people how to trade. It is not included in those subscription fees. Right? If you just want me to teach you and mentor you and coach you, there's a separate fee for that, which is almost about $1,000 US. It's almost about $1,000 US. But I'm going to do something generous tonight. Those of us who are going to be subscribing to, that software, you're not just going to get the software. We're going to give you the software. We're going to give you our ebook. We're going to give you that calculator. We'll give you our momentum tools. Plus, we're going to give you our training program, which will last you the next couple of months. We're going to give you that training program absolutely free of charge. So you don't need to go and pay us extra funds to join our training program. That is why I said you guys are going to love this, because we are not just going to give you a software that you're going to trade with. We're also going to empower you. We're going to teach you how to trade from basics to intermediate to the most advanced level of Forex. We're going to give you that absolutely free of charge. Go around the world, ask any traders. People will charge you $500. People will charge you $1,000, $2,000 to learn how to trade. I'm saying to you tonight, those of us who are registering and joining us, we're gonna give you this complimentary. All you gotta do is just subscribe for one of these packages. Either take Basic, Standard, or Pro. We'll give you the training for free. Plus, as I said, we're gonna give you a trading account to get started with. So here's the link for those of us who want to register and subscribe. This is the link you will need to use to register. That's the link you will need to use to register, and I'll show you guys actually how to pay your subscription on the website. So that is the link. All you got to do, it's on the comments, right? All you have to do, click on that link. It'll take you straight onto our website, and all you got to do there, fill in your name, fill in your surname, fill in your name, fill in your surname, fill in your email address, and then create a password. Fill in your name, fill in your surname, create a password, put in your email address. So when you click on that link, it will take you straight onto our website. Let's register. Register. I'll show you guys different methods that you can use to make payments. There's different methods that you can use to make payment. But for now, let's just get registered. Those of us who are serious about being part of our family, you want to make money with us, for now, just register. Then I'm going to tell you how you can pay your subscription. So when you click on that link, it'll take you straight onto our website. If it doesn't take you, copy the link, paste it on the browser. It should take you to our website though. So the registration part of it, guys, is very simple, straightforward. It will take you probably about, to register, it will take you 2 minutes. It will take you 2 minutes to register, nothing more than 2 minutes. So just click on the link, fill in your name, fill in your surname, fill in your email address. Then you must create your own password. That password, you will use that every time you log into our website. So please write that password down. I don't want you to forget that password. Write it down, and basically write the password down. And then as soon as you're done, then we're good to go. So here's the link. Then once you've registered, ladies and gentlemen, all you then got to do is log into your email address. So once you've registered, log into your email address. You will see there will be an email coming from us. Once you've registered, log into the same email you used when you were registering, right? Log into the same email address you used upon registration. Check your inbox, check your spam folder, check your junk folder. There will be an email coming from us. Click on that email. If there's nothing on your inbox, check your spam folder, check your junk folder. There will be something there. So you want to click on that email to verify yourself. Once you verify yourself, you will then need to log back into our website. So register, then go onto your email address, then verify yourself. Once you verify yourself, then log back in. Use the same email, same password, and log into the site. When you log in, this is what you're going to see. So when you log in, this is what you're going to see. You're not going to be able to see the Super T, the ebook, the calculator, none of those things. So when you log in, this is all you're going to be able to see, what is on my screen right now. So obviously, all you've got to do is either choose a month, 3 months, 6 months, or 12 months, whichever option you want to go for. So whichever option or however long you want to subscribe for. So for example, if you want to just test our service for a month, you can just go and pay for 1 month. If you want to go all in, you can go and pay straight for 6 months or 12 months. But if you want to just get a feel of it and maybe just pay for a month, it doesn't matter. Whether you're paying for a month, 3 months, 6 months, we will give you the training for free. Then scroll down. When you scroll down, you'll see that below basic, there's a button there that says choose. If you want to subscribe to basic, click on that button, choose. If you want to subscribe to standard, click on that button, choose. If you want to subscribe to pro, click on that button, choose. So if I click on that button, it should take me, okay, if it gives you this error, just click on that word cancel and say okay. And then go and click on the button, choose again. It will then take you to this page where you can click on the button pay. As soon as you click on pay, it will redirect you to this payment gateway, this page, which is called PayFast. It's probably one of the most secure and trusted in South Africa. Now, you can either use a credit card to process your payment, a check card, or even a debit card. But because I know a lot of us are outside of South Africa, please don't use your cell phone number, because then there's going to be, complications of country code. So to avoid, the different country codes, please use your email address when you get onto this page. Put in your email address instead of your cell phone number. And then you can put in, obviously, whether it's a Master, a Visa card, whichever card, as long as you're able to process transactions online with your card, it will definitely work. So you can put in your card number, which will be the 16 digits in front of your card. Expiry date will be the month it expires, the year it expires. Then your CVV is the last 3 digits at the back of your card. That's the CVV. Right at the bottom where it says name on card, that's where you put your name and surname. Once you click the button pay, your subscription will automatically be paid. Once you click the button pay, your subscription will immediately be paid, processed, and automatically you then part and parcel of our family. You'll then be part and parcel of our family. I'm looking forward to trading with you guys. I'm looking forward to making massive amounts of money. Once as soon as you're done with that process, you can let me know in the comments. Guys, the amount of profit that everybody's on right now is insane. The amount of profit that everybody's on right now, it's insane. It is insane. The amount of money that everybody's making right now as I'm speaking to you is crazy. It's crazy. It's crazy. And I believe as you are sitting there, you now need to ask yourself, do I want to continue struggling with Forex? Do you want to continue losing money in Forex? Or do you want to make money? That's the decision based. It's not even about subscribing. It's not a subscription. It's not about the subscription. It's not about joining Sandile's company. It's not about paying. It's about, do you want to continue losing money or do you want to make money? I think that's the decision ready. That's all that all of us need to decide. Do you want to make money or do you want to continue, with this trial and error, losing money, experimenting with this, experimenting with that, watching YouTube videos, losing money, thinking you can do it on your own. That's really what it boils down to. Absolutely, Emeka. That is exactly what I was saying, Emeka, that normally I will charge a separate fee for teaching you. Normally, under normal circumstances, I charge a separate fee to teach you how to trade. There's a separate fee for the software, right? But right now, we are saying those of us who are registering and subscribing, this is basically a promotion. This is not what we do every single day. This is literally a promotion that I'm doing right now, where we are saying those of us who are registering and subscribing with us right now, because we have training starting, and I did mention that our office is closed tomorrow. So that is why we're saying those of us who are registering and making payment right now, we'll give you the software, we'll give you our webinars, access to all our webinars, plus the training that you will normally pay almost $1,000 for separately. So that is included in your subscription. Whether you're subscribing for a month, 3 months, 6 months, it doesn't matter. It doesn't matter. All you got to do, get on board. All you got to do, get on board and be good to go. Hello, Mr. Sandile. Please explain the packages again for us to choose. Some of us missed that. Okay, I'm going to go through it one last time. You've already registered, then all you got to do, Emeka, is just get your payment done. That's all you got to do. Once you've registered, you just need to get your payment done online. Then you're good to go. Guys, one of the reasons why I'm so excited, and I'm so passionate about this, is because of how much money people are going to make. That is one of the reasons why I'm so excited. And I'm like, geez, guys, let's not even wait for tomorrow, because I know the results. I know the result. I wouldn't sit here and trade in front of you guys if I didn't believe in what I'm doing. I would not embarrass myself on a webinar if I didn't believe that there's nothing close to this. So let me quickly explain the different packages. So the basic, once again, you're getting 11 currency pairs only. So if you're subscribing to basic, you will only get 11 forex pairs to trade, nothing more than that. In a day, you'll be getting about 50 pips, as obviously what you will be generating. And in dollars, this is about $85 in a month. That is the basic. So you're getting about 11 trades to take every day, but it will be specifically forex. So you're not going to be able to trade any other instruments except for those 11 forex pairs. Then the standard option, which is a little bit more, this is about 145 US dollars, the standard option for a month. And what you are getting with the standard is you are getting more forex pairs to trade, plus you're getting metals, which is gold and silver. And in terms of what you can make in a day, it's about 100 pips or more, plus minus 100 pips. And I did make an example of if you're trading with about 0.1 volume lot size, which is one mini lot, you'll be making about $100 plus minus a day with the standard, which means you'll be making more than half what you're paying for this. You'll be almost making half of that in a day of what you pay for the whole month, because this is about 145 USD. And then the pro will give you everything. So the pro, you'll be able to trade forex, metals, commodities, indices, stocks. In a day with the pro, you're looking at over 200 pips in a day. 200 pips in a day. And the pro is about $204 for a month subscription. So this 3,499 Rand, it's about 204 USD. The standard is about 145 USD. The basic is about 85 USD. Right. Of course, can't pay with my card. I'm frustrated. Oh no, can't make payment with your card. Oh Lord. I see quite a lot of us have registered already. Once you've registered, just get your subscription done. As I alluded, all of us that are registering and paying right now today, we will give you the training for free. We're giving you a trading account as well for free to start trading. We're giving you lessons for free. You will be having access to about 4 different webinars every single day. Not recorded webinars, live webinars where we will be trading with you, teaching you, and the list goes on and on. So even if you've never traded before, believe me, you will be able to start making money. Because as I did mention, we're not just going to give you a software and expect you to, to get everything on your own. We're going to teach you. So part of what you're paying for is we're going to teach you and show you exactly what you need to do. We're going to teach you and show you exactly what you need to do. I'm just quickly copying something. Those of us who want to use, I forgot. Those of us who want to use Bitcoin. That is our Bitcoin account or our Bitcoin wallet. Those of us who want to use Bitcoin to make payments, that is our Bitcoin wallet. If you want to use Bitcoin to make payment, that is our Bitcoin wallet. Once if you can't make payment online using a credit card or your debit card, you can actually make payment via Bitcoin using that wallet. If you're going to pay via Bitcoin, in order for us to know who has made payment, please send your proof of payment to our finance department. If you're making payment, can I pay through PayFast? Yes, you can. You can. If you're paying through PayFast, you just use your credit card or check card or debit card. You just pay online if you're using a credit card. Guys, we are sitting on crazy profits. We're sitting on crazy profits. It's not even funny. We're sitting on crazy profits. Crazy profits. Crazy profits. Everybody should be smiling right now. Everybody should be smiling right now. Everybody should be smiling right now. That is what I'm trying to do in South Africa, in Africa, and the rest of the world. That is what I'm trying to do in South Africa, Africa, and the rest of the world. It's just a question of how serious are you? That's it. So when can I get my wallet address? So if you go through the comments, I've shared with you guys our Bitcoin address. If you do want to make payment via Bitcoin, if you want to use PayFast, just process it online as I showed you earlier on. Alternatively, you can use Bitcoin. If you do use Bitcoin, please send proof of payment to that email address, which is finance@itradefxlive.com. Right, guys. I believe things are never going to be the same in Africa. I believe things are never going to be the same in the Forex industry. I believe things will never, ever be the same when it comes to retail Forex. Again, you know, I'm quite confident. I'm quite confident, and I feel very proud of what we are doing. I feel proud of what we are doing because, as I said earlier on, guys, men lie, women lie, numbers don't lie. Men lie, women lie, numbers don't lie. Men lie, a lot of men lie, a lot of women lie, but numbers, results, that doesn't lie. That does not lie. That does not lie. That does not lie. That does not lie. So that is it from me. I need to go and get some rest. I need to go and rest. I've got some amazing things that I'm planning on doing tomorrow. I'm meeting up with some of my very close friends. We're hitting a game of golf, and I want to spend some quality time with my family. Get registered, guys. Get subscribed. Make payment. I want to see you guys online. I want to make money with you guys. I want to change Africa with you guys. I want to change the world with you guys. You know, I believe, we've reached the end of the journey. In the past couple of months, we had that Black Lives Matter movement. It's still there. Black Lives Matter. Black Lives Matter. Okay, cool. Black lives do matter. But here's the thing. As long as we are not empowered financially, as long as we are not in a better position financially, we will always not matter. That is the unfortunate reality we've got to accept. If we want to be respected as Africans around the world, if we want to occupy certain positions and get our voice heard, we need to be financially comfortable. We need to be financially free. We need to be able to stand our ground financially. We must not be in a position where we are begging. And hence why I hate free stuff. I hate because there's no such thing as free. We need to empower ourselves, and that is what I'm trying to do with our company. It's beyond just Forex. It's beyond Forex. It's about saying, let us gain back our power. Let us be empowered. Let us be in a position where we can take care of our families. We can take care of ourselves, and we can ultimately take care of those around us. If we can do that, we will be able to change Africa and truly be independent. The free accounts, guys, everybody's going to get that. The free accounts that I promised you, everybody's going to get that. But nobody's going to get our subscription and training for free unless you subscribe, right? As long as you haven't subscribed, you're not getting that training. You're not getting the software. You will just get a free account, which you're probably going to blow. If you don't have access to our software and training, we're going to still give you that account. So everybody's going to get that account. But you're probably going to blow that account unless you subscribe. So even if you don't pay, what I promised you, we're going to give you. Even if you don't pay, even if you are skeptical, even though we're making money and you're still skeptical, we're gonna give you that free account. So everybody, even my dear brother who was saying, giving those comments earlier on, will give everybody that free trading account. But obviously, we're not going to help you on how to trade that account. We're not going to help you. We're not going to give you the support. We're not going to help you with anything. We're just going to give you a free account, which you're probably going to lose in a couple of days. But those of us who are subscribing will then obviously give you the tools, we'll give you the training, we'll give you the support. I see somebody was saying, how do we reach you, Sandy? How do we join you? It's simple. Once you've registered, we're going to be getting in touch with you. We're going to be getting in touch with you. We're going to be trading with you almost every single day. From me, it has been an absolute pleasure. Thank you for joining me tonight. I wish you guys nothing but the best. I wish you nothing but the best in future. What's important is you have seen it with your own eyes. You've seen money being made in front of you. You've seen what Forex is, not what people are saying on YouTube and the internet. You've seen money being made in front of you. All you got to do is make that right decision, and I will see you on the other side. We host a lot of webinars that I host myself, specifically for clients. By the way, this was just a free webinar. This was not an exclusive webinar. This was just a free webinar to kind of give you guys an idea as to what we do, how we do what we do, and how you can get involved. But if you're serious about being part of my movement, part of our company, and making money with me, get registered, get subscribed, and I will see you on that private exclusive webinar that we do with our clients. Take good care of yourself. God bless. And remember that our dreams are possible. Our dreams are possible. There is no such thing as a dream that is too big. Any dream is possible. I was told by a lot of people, that it is impossible to own your own house, own your own vehicles. And when I say vehicles, I'm not referring to just any vehicle. I'm referring to Lamborghinis, Ferraris, and the list goes on. I was told you can't do that. Sandile, you're crazy. Believe me when I say I was able to do that at the age of 23. I'm turning 29 this year. So you can do the maths. I don't own one property. I own a number of different properties. And I'm saying to you, if I can do it, you can do it. If I can do it, you can do it. I wish you guys nothing but the best. Let me quickly just go through some questions here. Please, do I get this video? We're going to send you guys a recording of this video. Everybody, we're going to send you a recording of this video. That is why I was saying, don't drop your emails. A lot of people were interrupting me earlier on, saying, Sandile, please send me a recording. We have recorded this webinar. We're going to send it to everybody. So don't worry about that. If you want to watch this again, you're going to get the recording. So don't stress about that. What other question do I have? Looking forward to joining the winning team. Awesome stuff. Was this lecture recorded? Yes, it was. You will get the registration. When is the registration start? It started right now. There are people who registered right now. There are people who are making payments as I'm speaking to you. By the way, guys, please don't delay with the subscription. Please don't delay paying your subscription, because our training starts on Saturday. So if you pay on Monday, you're going to miss it. You're going to miss it. You're going to miss it. So if you haven't made payment right now, you still can pay tomorrow. It's Thursday. You can pay on Friday. But anything after Friday, you're going to miss the training. So if you go and pay Monday, the training, you can, but you're going to catch the training halfway. You want to catch the training right at the beginning so you don't miss the important part where we start the journey. So I would say get registered, get paid today. Tomorrow, you've got today, you've got tomorrow, you've got Friday. Get that sorted so that Saturday we will begin teaching you. And during the next few days and for the rest of the month, we will be trading together. What other question is there? Recording, yes, it is recorded. Yes, it is recorded. There's a lot of questions regarding recording. Yes, it is recording. Any other payment options? So you can pay online, following the steps I showed you. Register using that link I shared earlier on. Fill in your details. check your email, verify your email, then log in, choose a package, click the button pay. It will redirect. You can use a credit card, check card, or you can use Bitcoin. Excuse me, or you can use Bitcoin to pay. Oh, by the way, you can actually use Skrill as well. But all of these different payment methods, I believe if you're struggling to use the ones I've told you, our team will contact you. So if you're struggling, if you're struggling to register and pay right now, our team will probably help you. Musa, registered and paid. What's next? Welcome to the family, Musa. Welcome to the family and everybody else who's paid. So once you've registered and paid, what's next is our team is going to contact you. So our office, our finance department specifically, they will contact you and give you all the information you need, from how do you access the training, the timetable for our webinars. You know, they will also tell you who your accounts manager will be. They will help you set up your trading account and all of that. So once you've paid, of which you have paid, Musa, and everybody else who's already paid, the next step is just expect our team to contact you. Just expect our team to contact you. Our team will be getting in touch with you shortly. They will be contacting you, getting in touch with you, helping you get started. By the way, guys, tomorrow is a public holiday in South Africa, as I alluded. So our team will not be working tomorrow. So they're probably going to be getting in touch with you as of Friday. So somebody was asking me the link to register. Here's the link again. Here's the link again. Ladies and gentlemen, I think I've explained everything I needed to explain. I've explained everything I needed to explain. And this basically brings us to the end of our webinar. It's been an absolute pleasure hosting you. Thank you once again for your valuable time that you've spent with me. I salute every single one of you. You guys are winners. You guys are destined for success, because while we were on this webinar, there's a lot of people who decided to watch TV instead of doing something a little bit more productive, something that can change their lives. Some people chose not to be part of this. So for the fact that you decided to sacrifice so many other things that you could have been doing right now, you could be spending time with your family, doing the things you love, but you decided to sacrifice that to spend this time with me. That alone says a lot about who you are. It says a lot about what you want in life. It says a lot about where you are destined to be. All I'm going to say to you, don't stop, keep going, and everything you've ever dreamt of, it's on the other side of fear. Let's get on board, and I'm signing out. Goodbye and good night.